Hey everyone, welcome back to the channel. My name is Domenico. Today we're going to be discussing what the stock market is and how it works in simple terms for beginners. I hope you enjoy. If you do, don't forget to leave a like down below and let's get right into it. So the stock market is basically a place where investors can go to buy and sell little pieces of public companies to and from other investors. Now, not every company trades on the stock exchange, only public companies do. And a public company is basically a company that has split up the entire company into many little pieces, and it could be split up into thousands, millions, or even billions of little pieces. And each one of these pieces is called a share of stock. So for example, Facebook is split into over 2 billion little pieces. So when someone buys Facebook stock, they have bought one of these 2 billion pieces. So if someone were to buy the entire 2 billion pieces, they would own all of Facebook. So it's important to remember all these shares put together create the entire company. So when you own one share of stock, you actually own a little piece of that business. Now the stock market is actually what allows people to buy and sell stocks, similar to how you would buy or sell something on Amazon. So if you're looking to buy a book on Amazon, you're going to pay the seller and the seller will send you the book. You're going to get the book in return for the money. Well, similarly on the stock exchange, if you're looking to buy a share of a stock, you're going to be paying another investor for their stocks. Similar to Amazon, stock prices are a function of supply and demand. If there is a book and there is a lot of demand for it and people are willing to pay a lot more for that book, the price of the book will likely increase over time. Whereas if not a lot of people want that book and not a lot of people are willing to pay much for that book, the price of the book will likely decrease over time. In the stock market, if there's a lot of demand for a stock and investors are willing to pay a lot more for a stock, well, the price of the stock will likely increase over time because sellers are going to be asking for as much money as they can get. Whereas if not a lot of people want to buy a stock and the demand is pretty low, well then the price will likely decrease because investors will be wanting to sell their stock, and to get rid of it, they have to lower the price of the shares. So on the stock market, prices are constantly fluctuating. Every second you'll get a different quote. And that quote is the price of one share of stock. Remember I said that 2 billion pieces of stock? Well, that price, let's say for example, Facebook is $220. Well, you're paying $220 for one piece of that 2 billion piece pie. So the more people want to buy a stock and the more they're willing to pay for that stock, the higher the price of the stock will likely go. A popular misconception in the market is that when you're buying a share of a company, that money is going directly to the company. And this is simply not true. This is true when a company initially sells all their shares on the market. And this is called an initial public offering, or an IPO. Once all these shares are sold on the market, the company no longer receives any money from investors buying that stock. From now on, it's going to be investors paying other investors to buy shares from them. So if you're buying a share of stock on the public market, you are paying another investor for their shares, not the company that it represents. Similarly, if you're selling stocks on the public market, it's not the company giving you back the money, it's other investors that are paying you to buy your stocks off of you. So this might be quite a difficult concept to understand, but it's important to think of the markets as a marketplace, such as Amazon or eBay, where you're paying someone for a product in return. So feel free to rewatch this video as many times as you'd like. This is a really important concept to understand, as it'll bring you one step closer to achieving financial freedom and creating wealth for yourself in the stock market over time. If the video did help you out, let me know in the comment section down below. And if you did enjoy the video, don't forget to leave a like down below and subscribe to the channel if you want to see more videos like this in the future. And click that notification bell so YouTube notifies you when I post a new video. But thank you for watching, and I'll see you in my next video.